March 13th, 2014. We are here at the premises of CMC Markets for another UK chapter monthly meeting, and today we are privileged to have a very good friend of mine, Tim McCullough, Tim from Lloyds Bank, technical strategist, very well known in the London market for his work. We are honored to have him here to present to us on FX options using technical analysis to improve directional trading. However, before we start the presentation, we will be doing a short interview. The interview itself and the monthly meeting presentation will be videoed and will be available at the UK chapter monthly meeting archives. So, with that, let's start the interview. Tim,
thanks.
Let's get to know you a bit. Can you give us some information about your personal and educational background before getting involved with technical analysis?
Sure, I probably come from an unconventional background for the market in that I read classics at university. So I'm more fluent in Latin and Greek than I am in economics. And I've been in the markets for about 27 years, however, mainly in foreign exchange, but more recently also in fixed income, and both as a trader and a salesman, and then more in recent years as a strategist. And for about the last 12 years, I've been heavily involved in technical analysis.
Great. But what was it, which brings me to my next question, how did you get first involved with technical analysis?
Well, in about 2000, I think it was, I went to work at UBS in London on the foreign exchange desk. And I was very fortunate there to get to know a very strong technical analysis team. And fortunately, they were very generous with their time and their efforts in helping me to understand the dark arts of technical analysis and to lead me into the light away from fundamental analysis.
Yeah, indeed. UBS is a very, very good technical analysis team. Okay, so what went past that point after you started learning the craft? How did you evolve to come to become the main strategist for Lloyds?
Well, I spent a lot of time educating my mind. I think the most important thing in technical analysis is being able to divorce yourself from the noise, which I regard as a lot of fundamental analysis. So disciplining my own mind was the hardest part. It took several years, as well, of course, as learning all sorts of different technical methodologies and finding the ones which were most suitable to me.
And could you please describe your day-to-day responsibilities at Lloyds and also the most challenging aspect of your work?
Sure. At Lloyds, I'm primarily responsible for technical analysis in fixed income and foreign exchange markets. Mm-hmm. So I'm advising the bank's clients, but also the traders on the aspects of risk in their markets. And that can be anything from extremely short-term movements, perhaps over the next 10 minutes or so, as well, of course, as clients who are looking for views over maybe 10 years in all sorts of related markets. And so I'm really have to cover a lot of ground quickly, respond quickly, but also say have the patience to talk to people about very long-term risk and opportunities. Okay.
Toolbox. Could you please talk about your favorite tools and techniques? What do you specialize in?
Well, I use primarily three forms of analysis. So for the trend following analysis, I use Ichimoku, which I've found very challenging, but extremely rewarding. It's taken me again some time to get really into the depths of that. It's a very subtle instrument. For my market timing and contrarian, which complements the trend following technique, I use DeMark indicators. And I've been fortunate to have known Tom DeMark for a number of years, and I've benefited very much from learning his indicators. And then finally, as a balance between the two, I use momentum. I use a very straightforward, very simple 14-bar RSI, but perhaps in a slightly more unusual way from some people.
Okay, so I would assume that the edge is derived by the way you look to interpret the indicator rather than using a proprietary indicator.
That's right. It is for me an art rather than a science. So I don't regard any of the DeMark, Ichimoku, or momentum studies as anything of a system form of trading. It has to be a subjective interpretation of the overall picture.
Understand. Which, after having discussed, of course, the tools that you use, can you give us a brief description of how you would use them to analyze the chart? For example, if we were looking at, I don't know, the S&P 500 or any market of your choice, what would be the steps to analyze that market?
Well, I think for any market, the important thing is really to establish the very big picture first. Are we in a very long-term trend or a range in any market? So ideally, if I had the data, I look at something like an annual chart. So the S&P, for instance, it's easy to go back to the 1929 crash, and then you can look at the very long-term parameters of that market. From there, I work my way through the more medium-term charts, so the quarterly, the monthly, the weekly, before finally coming to the shorter-term charts. Going again, for some of my traders, we could be looking at what's going to happen over the next 10 minutes or so. But it's always looking at any short-term movement. I need to know where it is in the context of the longer-term charts, if it's a range or a trend.
So, of course, if you don't mind answering that question, how do you combine a trend following with a mean reverting methodology? We'll talk about Ichimoku and DeMark.
Well, again, if you look at the very big picture, so take, for example, maybe something like dollar yen as an example, where although the dollar yen has been in an upwards trend now for the last couple of years, nevertheless, on a 40-year basis, it's very much in a downward trend. So by looking at the very long-term charts first and establishing the parameters of that trend, I can then look at any shorter-term indicators of contrarian, let's say mean reversion, in the context of the bigger picture trend. So I'm looking at the possibility of mean reversion just at the point where it meets the very long-term trend resistance.
Got it. And who have been so far your greatest influences? I naturally would assume Tom.
Yeah.
But are the other people that you found that their work was very useful to you in terms of your day-to-day responsibilities? Or, for example, if someone asked you, okay, it was starting out, give me three technical analysis, could you please name three technical analysis books to read? Which would these be?
Well, I started off, I think it's very important to start with a very wide range of literature to study, because I think everyone's going to have a different way their mind works, which indicators are good for them. So I would suggest looking at something, the classic book by John Murphy, just to get an introduction into the very wide range of indicators available, so you can begin to get a flavor as to what's going to suit your state of mind. Beyond that, in terms of the more specialized books, then, well, yes, certainly some of the books written by Tom DeMark, and also by Jason Pearl, my old friend from UBS as well. And then just ongoing, it's not just a question of reading books, but it's reading literature and attending meetings such as the MTA as well. So you're continually building up your body of knowledge. Great.
Technical analysis principles. If you could distill your market knowledge, or rather your philosophy, in some actions, for example, don't fight the trend, which would this be?
I actually would use an economist for that. So I like the quote from Keynes, where he likens analyzing financial markets to an old-fashioned newspaper competition, where you'd have a page full of, say, 100 beautiful faces. Well, all right, it might have been women, but you have to identify not who necessarily are the 6 most beautiful women. That's establishing fair value. You have to work out who all the other readers believe are the 6 most beautiful women, which means you're then analyzing who everybody else thinks are the 6 most beautiful women. Essentially, you're then looking for sentiment. So you have to look at markets in terms of analyzing the sentiment and the psychology of the market. Don't go for fair value.
Great. If you could give a call to 25-year-old Tim and give him some advice regarding markets and career-wise or market-wise, what advice would that be?
Well, as I said at the beginning, I'm a classicist. So although obviously the study of Latin and Greek is very good for the mind, I would actually advise someone not necessarily to go into the markets with a foundation in economics or finance, mathematics, or even physics. I instead would advise you to look at something like psychology
Yeah.
or any other discipline which gives you a very strong discipline in how your mind works.
What is your worst trade or market call you've had so far, and what did you learn from it?
There's just so many to choose from. The worst one. Some of the worst ones aren't actually the ones you make which you get wrong. Some of the worst ones are where you see something, but again, if your mind isn't strong enough, you don't actually have the courage of your own conviction to go with it, and you miss the best trade, even though it was staring you right in front of your face.
Got it.
Those are the ones I miss the most.
Fun fact, and that concludes our interview. What does Tim do to relax outside of market hours? I mean, do you have any hobbies, for example?
Well, Alex, you know me a few years now, so you may recall I was actually about 28 kilos heavier. So I have actually found that exercise takes up all my time now outside of work, and I very much enjoy that, keeping fit.
Great. Healthy mind and a healthy body as well.
Exactly.
All right, okay. That wraps up today's MTA's podcast and interview. My guest was Tim McCullough of Lloyds Bank. Now we'll be going to have the presentation, which we're very much looking forward. Tim, thank you so much for coming to the show.
Thanks, Alex.
And we'll be seeing you. This is Alex Piroglu for the MTA, the UK chapter. Thank you very much for tuning in.